On today's episode, we are going to take a look at why ARK Investment is so bullish in the digital wallets and fintech market. This could be big news for Square, PayPal, Sea Limited, Mercado Libre, and much more. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and get your free stock on Webull. The link is down below. So let's get started. So this is episode 3 of me reviewing ARK Investment's big ideas for 2021. If this is your first time here, don't freak out. Each episode is individual, so you don't need to watch them in order. Episode 1, we took a look at deep learning. Episode 2, we took a look at virtual worlds. And today we're going to take a look at digital wallets, where I pretty much just break down why ARK Investment is bullish in this market. So all these 3 episodes I have done so far are markets I'm very bullish on right now. Virtual worlds, I want to say, was probably my favorite because it covered a lot of the gaming department. All right, so digital wallets. Also, if you guys want to download the PDF, it is for free on ARK Investment. They give it to all investors, even if you don't have any of their products. So digital wallets, ARK Investment believes, represents a 4.6 trillion opportunity in your pocket. So they believe that Venmo, Cash App, and venture-funded startups are likely to upend traditional banking by activating the mobile phones, the bank branches, in users' pockets and handbags. Today, digital wallets are beginning to penetrate the full traditional financial service stack, including brokerage and lending. And this is pretty true. I believe we saw it pretty strong this past year with COVID situation. And even though both Cash App and PayPal did some form of lending prior to COVID-19, for them being able to lend out the PPP loans here in the United States, and maybe they also did it worldwide if whatever government in your country gave out loans, gave out kind of some form of stimulus loan for small to medium-sized businesses. I do believe that helped kind of infiltrate the market for these applications like Venmo, like Cash App. I personally had some family members or some friends who never used PayPal, or who only thought of PayPal as a peer-to-peer lending or Venmo or Cash App. But because of their business, they actually went with them to go with the PPP loan. So that kind of brought more customers into that. And now those people are going to talk to their business people. Those business people are going to talk to their employees. Those employees are going to talk to their friends. And it just trickles down. So, and just a perfect example, right? In the first PPP loan that was given out here in the United States, a family member of mine, the first person they went to was their personal bank. Which is just one of those traditional, either Citi, Santander, JP Morgan, one of those traditional banks. They didn't get it from there, and then they ended up going with like PayPal or Venmo or Cash App, I forget which one. Now, in the second PPP loan that is being given out here in the United States, they didn't even bother going with their traditional banks. They went straight to whichever one helped them out last, which was, I think, PayPal. So overall, like I said, and I don't believe this is just a one-person thing. It's happening all around the United States. So this is definitely a great move for PayPal, for Cash App, and these digital wallets. And also now you're more known to them that they can do lending and another form of brokerage, right? I mean, right, Cash App, we can take a look at their website real quick. They do payments, they do banking, they do cash card and boots, investing in stocks or in Bitcoin. With PayPal, right, you can now enter in crypto as well. They're kind of becoming a broker in crypto. And who knows, maybe eventually with this, they might start also heading into stock investing or some other type of brokerage. So currently, right now, digital wallets are valued between $250 to about $1,900 per user, but could scale up to $20,000 per users by 2025. And this is where they represent that $4.6 trillion. And we're going to take a look at what that means for some of these stocks. So ARK Investment also shows us how the overall exposure of digital wallets or third-party mobile payments has increased. And this, they show us one of the biggest populated countries right now, China, right? So China in 2015, right here, you can see how low their China third-party payments were compared to their GDP. Now, when we take a look at 2020, you can see this huge growth. Now, China third-party mobile payments are almost 3 times the size of their GDP, where in 2015, they were hardly about 20% of there. And I'm pretty sure this scale is happening very similar all around the world, from Europe to Asia to here in the United States. Next, ARK Investment was nice enough to give us some of the players that are within this market. These are not investment advice, they say, obviously. They just put some of the players within each region. For example, in North America, we have Cash App, right? We saw that is Square for those that are not familiar with the stock price. We have Venmo. Venmo is PayPal for those that are not familiar. SoFi, I believe they might be going IPO soon. There's also Chime and Robinhood, but those are not public right now. And to be honest, I wouldn't buy Robinhood at the moment. But one that really stuck out to me that I did not know about was Mogo. But Mogo is one that I found interesting. Right now, they have a market cap of about $300 million. And just to put in perspective, what is the market cap of Square? Square has $107 billion. So this is 1,000 times smaller than Square right now. And PayPal has a market cap of about 316 billion. I recently just did a small Twitch stream on Mogo, and I ended up purchasing once I started looking more into it. I have a small position just to keep on watch list, and later this weekend I'm going to do a little more research on it to see if I want to increase that small position to a way bigger size or if I'm just going to sell out. So right now I just entered it, but if we go to Mogo's website, right, it pretty much looks like a PayPal or a Square, right? So they have cryptocurrency trading. I do believe right now it's only Bitcoins. They also have Bitcoin cashback and rewards. They have loan protections. They have mortgages. They have your traditional banking lendings as well. Primarily, they are in Canada, but they are expanding into other markets. So this is a company I'm going to do a little more research on later on. I just want to say I recently did buy this on Friday for a small position. Now, if we take in South America, right, the only one I found public was Mercado Pago, which is owned by Meli or Mercado Libre. Maybe some of you guys, if you guys are more familiar with the South American market, feel free to share some more. I do believe another one actually out there would be Stone, ticker STNE, that kind of does fintech services, and they have a market cap of about $25 billion. What else did we see here in the presentation? In Europe, I wasn't able to find any that were public from these. Again, if you guys are familiar with the Europe market or maybe the African market or the Asian market, Alibaba Pay, I'm pretty sure that's Alibaba, and I'm pretty sure Tencent has a few one as well. There's also Momo, which I do believe is publicly traded as well. But they gave us some good ones. So definitely, if you guys are watching the video, feel free to post on the comments and let me know. This is a market I have become a little more bullish after reading it. I was already bullish in the digital wallet and the fintech, but now I want it to be a bigger portion of my portfolio. This is crazy. In the United States, digital wallet users are now surpassing the numbers of deposit account holders. Look how long it took, for example, JP Morgan to get these types of users, and they're kind of like flattening out. It takes them they only jump after major acquisitions. Cash App and Venmo have already reached more numbers than JP Morgan's deposit accounts in a matter of like 4 or 5 years. That shows you the power of these cash apps and how many people are moving into them. And why are they so sticky, or why are they so easy to grab into? First, digital wallets can acquire customers for a fraction of a bank's customers acquisition cost. And this is something I wasn't thinking about, or I didn't notice until I read this. And I mean, we see it. For you to open up, for example, a Santander account, a Chase account, they try to lure you in. If you deposit X amount of dollars, we'll give you $250, we'll give you $500, and so that acquisition cost to grab that customer, then to do all that advertisement, adds up over time. So that's about at least $250. Cash App and PayPal, what do? Hey, if you refer your friend, you'll get $20. If you refer your friend, you'll get a chance of winning a stock or blah, blah, blah. And most of those stocks or most of the stuff they give you are around $20. So it's a lot easier for digital wallets right now to bring over their customers. And I did not think about that, but that's actually pretty smart. And like I mentioned, right, with the PPP loans and all the other lending stuff that are now happening, Cash App and PayPal have kind of entered this market as well. They have entered the unsecured personal loans. And for those that don't know, when you see unsecured loans, that's your traditional personal loans, your student loans, or any kind of loan you take from like LendingTree, Firm, or stuff like that, where you don't really have anything in collateral. All they look at is pretty much your credit worthiness. And depending on your credit, you get a loan, and based on a set APR or interest. Those are unsecured loans because there's nothing securing that you're gonna pay it back. ARK Investment believes that digital lenders such as Square, PayPal, Affirm is also public. Another one I didn't think about. Lending Club is also public. Klarna, never heard of them, are likely to take share from traditional banks. So those companies, if they're not completely overvalued right now, they might represent a great addition to add to one's portfolio. To me, just the personal loan, so I'm not sure how much I know about Lending Club, but just peer-to-peer lending is not something I'm self-bullish on, like not just that market. I do believe the overall fintech and the overall digital wallet is a whole different market, and that's why I personally would prefer something over like Square, PayPal, over like LendingTree or Lending Club. And here they talk how this potential maturity in 2025, a digital wallet can be roughly about $20,000 worth. And right now it's worth about close to $250 to $2,000, back to the closer range. And they believe brokerage will be about $1,000, savings and spendings accounts will be about $1,700, personal credit and mortgage will be about $2,500, insurance will be about $2,600, payments will be about $2,700, offline and online commerce will be about $9,400. And I was thinking, right? I was kind of thinking, how would this increase of digital wallet be good for these companies? So like, who cares if I have more money in PayPal? Who cares if I have more money in all these platforms? Why does it really help at the end for Cash App? Why does it help in PayPal? The first thing obviously is the simple one. There's going to be more transactions, right? With more transactions, if they're increasing their offline and online commerce and payments, there's some fees behind that, right? Maybe us as the consumer, we don't see those fees, but there's definitely some fees in the back end. The second thing, it means that people are going to be more and more adjustable or familiar with these platforms. And when they become familiarized with this platform, whatever type of other services these other platforms might have, they're going to go with them. Like I mentioned earlier on with my family member who first went to their personal bank to try to get their PPP loan because they were comfortable with that bank. They've had that bank for some time. Now, when you become comfortable with PayPal, when you become comfortable with Cash App or any other of these digital wallets or fintech, when you need some form of loan, when you need something that they provide, you are going to go to them first, and that's going to go increase the fees, increase the revenue for these companies. And we are seeing a strong growth. We can see this digital wallet users here in the United States. And between 2020 and 2024, this curve up is expected to be dramatic. So after 2026, I want to say the curve kind of starts to flatline, kind of starts to saturate. So we're still in the beginning game of this digital wallet, of this fintech market. And that's why I am starting to be even more bullish and want to increase my overall exposure in my portfolio in the fintech world. So I hope you guys enjoyed today's episode. The more I read about it, and even though I obviously read this, so you saw the highlights on my PDF, I've read this numerous times, and every time I read it, I get a little more bullish and bullish in this market. So let me know what you guys think. Are you guys already big in the fintech market? Are you gonna grow even bigger? And make sure to share some of the stocks you know in that fintech market. Like I did, I shared one with you guys, Mogo, and we're gonna do a little more research on that to see how much more exposure I want to build up in that stock. So take care, guys. Have a good night and see you next time.